Hi, my name is Brian. Welcome to this journey through space. Today, we are going to study the chapter, which is Regulatory and Legal Framework in Insurance. In this chapter, we'll explore what the regulatory and legal framework in insurance is, how we detect the different aspects of governance, the possibility of finding global parallels, and the role of regulation in ensuring stability and trust in the insurance industry. While I won't be talking about alien life, I promise we'll uncover the universe of rules, institutions, and protections that govern insurance in India and around the world. So, let's embark on this learning journey. Overview of the regulatory landscape. The regulatory framework of insurance is like the GPS system of the insurance world. It guides insurers on the right path and ensures they don't take dangerous shortcuts. In India, regulation has evolved significantly from an almost unregulated market to a robust system of oversight. It aims to protect policyholders, maintain financial stability, and ensure the fair functioning of the market. The Insurance Regulatory and Development Authority of India, IRDAI, plays the central role here. This slide introduces how India's regulations align with global practices, ensuring the industry grows responsibly while protecting the interests of its citizens. Evolution of insurance regulation in India. The history of insurance regulation in India spans over 80 years, marked by several landmark laws. The Insurance Act of 1938 laid the first comprehensive legal framework, while the Life Insurance Corporation Act of 1956 nationalized life insurance to protect policyholders. In 1972, general insurance was nationalized, creating 4 state-owned insurers. The IRDA Act of 1999 was a game-changer, introducing an autonomous regulatory body. By 2015, amendments allowed more foreign investment and modernized the sector, showing how regulation adapts to changing market needs. Insurance Regulatory and Development Authority of India, IRDAI. The IRDAI was established in 1999 and is headquartered in Hyderabad. It oversees both life and general insurance, ensuring fair practices and market discipline. Its objectives are fourfold: protect policyholder interests, promote the orderly growth of the industry, regulate and ensure fair conduct, and bring transparency to financial markets. Think of it as both a referee and a coach. It enforces rules but also helps the players improve. The IRDAI ensures that the industry operates efficiently without exploiting consumers. Key insurance acts in India. 3 key laws form the foundation of insurance regulation in India. The Insurance Act of 1938 sets the groundwork for registration, solvency, and investments. The IRDA Act of 1999 formally created the regulatory authority. Finally, the 2015 Insurance Laws Amendment Act modernized the sector by increasing foreign direct investment and enhancing consumer protections. Together, these laws strike a balance between encouraging market growth and safeguarding policyholders. Understanding them is essential for anyone studying the financial services industry. IRDAI's regulatory powers and functions. IRDAI's powers span across licensing insurers, approving products, supervising solvency, and monitoring market conduct. Its market-facing actions ensure companies operate fairly, while consumer protection measures safeguard the rights of policyholders. The IRDAI also prevents malpractices through strict compliance requirements. Just as a central bank stabilizes the monetary system, the IRDAI stabilizes the insurance market. This ensures that both the smallest policyholder and the largest insurance corporation operate within a trusted environment. Consumer protection in insurance. Consumer protection is a top priority for regulators. The Consumer Protection Act of 2019 ensures that customers have the right to fair treatment, truthful information, and recourse against unfair practices. The IRDAI supports this through measures like mandatory disclosures, standard policy formats, and a free look period to cancel policies. Grievance redressal mechanisms and regulations on unfair practices ensure that the market stays transparent. In short, policyholders have legal backing to demand fairness and clarity. Insurance Ombudsman Scheme. The Insurance Ombudsman acts as a mediator and problem solver between insurers and policyholders. Policyholders can file complaints for free, and the process is designed to be quick and cost-effective. The Ombudsman first tries mediation. If that fails, they issue a binding award for insurers. The scheme covers claims up to R30 lakhs, making it accessible to the average policyholder. This mechanism builds trust in the industry by ensuring that disputes don't drag on in expensive court battles. International insurance regulations. Insurance regulation varies worldwide, but the goals are similar: solvency, consumer protection, and market stability. The EU uses the Solvency II directive, focusing on risk-based capital requirements. The US relies on state-based regulation through the NAIC. In Asia, each country has its own regulatory body. Japan's FSA and China's CBIRC are notable examples. The International Association of Insurance Supervisors, IAIS, sets global standards, ensuring that markets can cooperate and compete in a safe environment. Data privacy and anti-money laundering, AML. Insurance companies handle sensitive personal data, making data privacy crucial. Laws like the IT Act, IRDAI Cyber Guidelines, and pending Personal Data Protection Bill set security standards. AML rules, based on the Prevention of Money Laundering Act, require insurers to perform KYC checks, monitor suspicious transactions, and report to the Financial Intelligence Unit. These measures prevent fraud, protect consumers, and ensure that the insurance sector isn't misused for illegal activities. Future regulatory developments. The regulatory future is moving towards digital innovation and risk-based supervision. Frameworks for InsurTech, online policy distribution, and digital claims processing are being developed. Principles-based regulation and global capital standards will ensure Indian insurers compete internationally while protecting consumers. Enhanced disclosure and expanded consumer rights will further strengthen trust in the system. As the market evolves, students must understand these trends to anticipate shifts in the financial ecosystem.